It'll be just a moment, folks. We're just getting YouTube hooked up here. Hope everybody's having a great day. All right, here we go. It'll be just a moment, folks. We're just getting YouTube hooked up here. Hope link here. Here. Okay. All right. All right. All right. We should be good to go. We should be good to go. Let me just post all this here. Infinitely. How are you? Good morning. Cam, good morning. Good morning and good morning. Welcome, welcome, welcome. Let me go ahead and share my screen. There we go. Perfect. We can all be on the same page. I'll get started in just a second. Good morning, Timothy. Awesome. Good morning. We'll give the room a minute to fill up, and then we will begin. And remember, folks, I have my VIP room at 11 today because it's Thursday. We got Write This. We got Dave. We got Tenright. We got Henry. There we go. Andre, Ivano, Robert, Jim, Carrie, Curious, Rick, Carrie, and folks. Again, just to regurgitate the same thing or reiterate the same thing. We have a Q&A session that's live every day, Monday through Friday, from 10 a.m. to 1 p.m. Eastern time, where folks like you can go into your members area, hit a red button, and get someone live on Zoom in real time to answer all of your questions. All you've got to do is go to your members area, and there's a link there, okay? And that's something Cam and his associates put together, and I'll actually be there tomorrow, I believe, right after VIP room to answer some questions. Good morning, Jack. All right, let me just repost this one more time, and we will get started. We got plenty of people here. And folks, by the way, here's my email address for anybody that has any questions, comments, concerns. You can always email me. I'm not that busy these days. This is pretty much all I do. Okay, let's talk about the market. So the NASDAQ is down about 47 points, which is definitely flying. Ronan is here. That's it, folks. We could start. The NASDAQ is down 47 points. This is beyond random. This is just a hair beyond random. The Dow's down 124 points, which isn't very much. We have a lot of data. Not sure which one, Adam. You'll have to send me an email. I got so many things in play that I just don't remember. Oh, yes. Yes, it is. Now I remember what you're talking about. It still is. Yeah, I still like the financials. Andre says, I love this channel full of valuable information. I've gotten about 5 of my friends to see this. Oh, that's great, Andre. I love that. And Kathy says, this room is very helpful. Good. And Muhammad's in the house. All right. Let's I don't want to get carried away here. So we've got jobless claims. This report is useless. This report is about as useless as they get, Ken. This report, I mean, you know how they say the VIX is broken? No, the jobless claims report is broken. For 2 years now, this number has been in the low 200,000s. And they make, they argue it goes up 5,000, it goes down 5,000. It's useless. I mean, really, take a look at it for the last 2 years. It hasn't moved. So this report is not going to help us at all today. The big report is going to be personal income, PCE, and pending home sales. And we have a bunch of Fed speakers. You might or might have noticed that the Fed speakers, them speaking has not been as impactful to the stock market as it was before Powell went on 60 Minutes. And then what's interesting is, caveat, this report right here, this personal income report, usually comes out on Friday. It's coming out today. This is the big Friday report. I have absolutely no idea why it's coming out today. I talked to 2 guys who've been doing this for about as long as I have, and they wanted to make a bet that it was going to be on Friday because it's always on Friday, but not today. They both made a mistake, actually. It was kind of funny. People get into habits. It's a swing, no surprise going well. Yeah, I always set up a trade as a swing. All of my trades start up as swings. If they're not on my swing radar, they will never be on my day trading radar. I would never, ever, ever day trade or touch a stock unless it fit my swing trading criteria, period. Because if it goes against you, I want to have something to lean on. Doesn't that make sense? You know? Okay. So a lot of reports. Now, here's the thing. Pending home sales is coming out today. I don't think it's going to be a big report because we already have here, what do we had earlier this week? New home sales. And the new home sales data was really good. Usually when new home sales data is good and the permits are strong, pending home sales is all right. But I don't think that's going to impact it's I don't think it's going to be as impactful. Um, Jobless claims, not a big burger. Personal income outlet, important. Chicago PMI, pretty important. And obviously, we're not going to trade before 10 a.m. because we don't do that. But just know this. Know that that there's a lot of stuff on the table. Okay, most of it's going to impact the bond market. Remember this line I drew here? Let me get rid of the moving averages. It'll actually be easier to see if I get rid of all the crap that's on here. Okay, perfect. So you see this line right here? This is a descending triangle. There's two ways this can go. We can either consolidate here. Well, there's three ways we can go. We can break out like we did here and then come right back down. I don't think that's going to happen. We can consolidate right below this level. Let me just erase that right there. We can kind of consolidate around this level, or we could start really breaking down. I don't think we're ready to break down just yet, but I'm watching us to come down to this level. Now, what I'm going to say may be a little controversial and it may be a little forward looking, but if the Fed, and I don't know if they're going to do this, I was really confident that they were going to push back lowering rates till second part of the year. You could have put a gun to my head and I would have said that. But can I honestly say that the Fed is not going to start lowering rates in June, July? I can't say that in good faith right now. So because I can't say that in good faith right now, there's a good chance it may happen. Honestly, even right now, I'm looking at them talking about 15%, 20% in May. I think that's pretty accurate. I mean, there's still a lot of time between May and now, but more likely than not, it's going to start happening around June, July. Now, here's the problem. If that timeline does not get pushed back, the bond market will start little by little gravitating lower. But if that number comes out and in, let's say in 3 weeks, they say, you know what, Roger's been right. It ain't going to happen till October. Or if they start kicking the can further than the second part of the year, you're going to see a big aggressive drop in the bond market. But if you see them stay on this wavelength where, oh, there's a good chance it'll happen in the summer, then the bond market will kind of stick around this area. So it's not a matter of whether it's going to happen or not. It's the timeline that the Fed has. So when they first thought, when everybody thought it was going to happen sooner than later, the bond market rallied and then came right back down when they pushed back at the timeline. So remember, if they're going to lower rates, that pushes bonds, interest rates lower and bonds higher. So if you don't see bonds higher for this early, it's because they're pushing back. The more they push back, the more this will break down. So if you start seeing this break right here, and folks, this is very important. This is going to be a catalyst, okay, for the stock market. So I'm giving you the play-by-play like 3 months in advance right now. There's a reason for it. If you see a breakdown of this level right here, that means the sentiment towards rates going down between June and say October are 0 or like 15% or 10%. Right now, they're like 60, 70%. And the Fed is saying second half of the year, I'm in agreement with that. I think everybody's on the same page, but I am serious. If you start seeing the bond market break down, that means they're changing their tune again. And if they change their tune and we break down from this descending triangle, that means we're going to be back to square one where the Fed is going to say, we really don't know when it's going to happen. So right now, it's going to happen in March. No, probably summer. Oh, it may not happen in the summer. It may happen in the fall. Oh, it's not going to happen in the fall. It's happening in the winter. Or, oh, it may not happen till 20. Oh, this is gonna break down. So we're racing against time to see when this breaks down. The faster interest rates, the faster the sentiment towards lowering it becomes real, the faster this will start stagnating and coming up. The faster we get bad news and saying, hey, we're not going to get anything anytime soon, the more it'll go down. I know I spent a lot of time on this, but it's important for me to that you guys understand this because the bond market is what drives the stock market and gives the stock market that rhythm, that elasticity that we all really like. Um, that's right, Adam. It is. So very, very, very important. Let's look at volatility to see if volatility is picking up. It just a hair. Keep an eye on it. I don't think I'll talk about levels in a minute, but basically, I'm looking at this level. I'm looking for volatility to be between 15 and 13. Anything above 15 is going to be a red flag. As long as we stay above the below the 15 level, we are okay. And I'm not expecting the downside to get too aggressive. Although almost every day, I'm starting to get more and more stocks on my watch list, and you guys may remember if you follow me every day, you may remember I show this graph of how many stocks are making 90-day breakouts versus 90-day breakdowns. Remember it was 400 here. Keep your eye on this number right here. 210, keep your eye on this number. 303, 233, 394, 440. Do you see that? And back to 163. So right now we're at 210. So the momentum levels, basically what it's telling us, the markets are starting to get more choppier. And I didn't have to tell you that. You probably have noticed that by your positions. Not necessarily losing steam, just becoming more choppier, more random. Takes 3, 4, 5 days for the position to come back up versus immediately bouncing back. You guys know what I'm talking about. Gritsky says no interest rate decisions. Sectors have no clear direction. That is correct, my friend. That is correct. A lot of folks don't realize that the stock market gets its movement from the bond market, and the bond market gets its movement from the currency market. The currency market is 1,000 times bigger than the stock market. The bond market is 100 times bigger than the stock market. I don't know if you guys know that or not, but I'm talking about the US and global markets. So again, momentum levels are becoming more random, which means markets are starting to kind of cool off and start. This is why it's so important right now to really pick the best stocks. Otherwise, you're going to be screwed. Looking at the S&P, as I predicted, this is today's data. This is, oh, wait, let me go extended hours here. Okay. So this is today. This little dot right here is today. But look at the trading range. I wish there was a way for me to make this bigger. If I make it bigger, it's going to go into intraday, and I don't want to go into intraday. But even when I go in the intraday, look at the trading action yesterday. Look, listless. Look at the size of this bar, Look at this type of trading action, and then look at what we've seen the last couple of days. This is the last 2 days. We've been doing this. Just very, very. Ken, I gave a bonus trade in the last Ask the Pros that we had on VIX. It was how to get the best $500 trade. It was about 2 weeks ago. I told folks to buy options on VIX right here. I told folks to buy options when VIX was right here, and I said sell it. It's going to be at 19. It never went to 18, but it went to 19, but it went to 18. So folks took $500 and made 400 out of 500. So 900 total. If it went here, it would have been 500 to 500. But that's a trade I gave live 2 weeks ago. So to answer your question, yes. Okay, so let's get back here. So you guys could see the market is down about 0.23. It's down double what it was down yesterday. It was random yesterday. But you could see we're in this little consolidation. And the question is, are we going to start breaking higher or not? Notice volume. Volume levels are really, really low on the way down. That's very positive. That means sellers aren't aggressive. Aggressiveness is a very, very important word when it comes to trading because nothing happens unless one side gets aggressive, right? You guys know that. No, more VXX, Cam. The options on VXX are pretty good. Oh, good. I'm glad you took that trade. All right. So This is positive for the bulls. The fact that we have very low volume as the market is cooling off, that means that bulls are really fighting and bears are being pretty passive. I'm hoping that'll stay that way, but right now we're about to hit the 8-day EMA. If we break the 8-day EMA, we're going to go back into this channel right here. See this channel that I drew right here? Well, this channel tells us that the market is going to go into a randomness period or start coming down. So if we bounce back up and start coming back up here, it's good. But if we start coming back into here, that means randomness. QQQ, and by the way, we've had a lot of randomness lately. It's been very difficult for me to trade this market. You guys might not have noticed it in the pit. I've been doing really, knock on wood, I've been doing really good, but it's been very hard, especially when you see like the NASDAQ up, the Dow down, the divergence, the consolidations. It's been a very choppy, difficult market, and we haven't had any real downside action. So it's not a day trading market. Let's put it that way. But we've been doing really well. We did good yesterday with Hershey's and with Albemarle. All right, so same thing with the NASDAQ. Notice very flat, very choppy. If you go, yes, that's what I told. Customer service live, folks. If you have questions, just pop right in. Your members area, big red button. All of your questions will be answered. So notice yesterday was very, very choppy, and Friday was very choppy. This is the last 2 trading sessions right here, 2-3 trading sessions. Absolutely no elasticity. I believe we're probably going to come right back down to this level because it doesn't seem like we want to test the high. And volume, as I mentioned previously, has been coming down. So that is a good sign. Volume going lower, markets stagnate. That means the bulls are well in control. And obviously, the bulls are in control. We're near all-time highs. And when you're near all-time highs, you're going to have a lot of liquidity and funds coming into the market, okay? Let's talk a little bit about global economy, back up a little bit, and I'll give you guys stocks that I'm looking at this morning. I got my notebook right here. A lot of Fed speakers today, Adam, but I don't think they're going to have as much okay, thank you for bringing that up. If you're going to be watching the Fed speakers, here's what you want to pay attention to for the next 2-3 weeks. You want to pay attention to whether or not they're starting to little by little, maybe even circumstantially, push back the timeline. If they say things like, well, we weren't ready before, but I think we're ready now, that's not going to move the market. But if they start saying, well, we don't know if we're going to lower rates the second half of the year, we still have to figure things out. If they start saying right now, well, 2 weeks ago, 3 weeks ago, a month ago, they were pretty certain that it was going to happen this year. They really didn't say the market implied that it was going to happen the first half of the year, not the Fed. The Fed was very clear to keep their big mouth shut for once. Then the market and the Fed got aligned. Now we're all exactly on the same page. The Fed made pretty strong statements that it's going to happen second half of the year. What you want to see, Adam, and everybody else is, you want to see if they're going to start now going, well, maybe winter or maybe beginning of 2025. That's the language you want to wait for. If they keep saying, well, we don't know when it's going to happen, but it's going to happen this year, that's fine. But if you start hearing words like someone kicking that can back, there goes the bond market again, and there goes volatility to the upside. So just I'm warning you, that's what you want to pay attention to. And one of the reasons why we haven't been seeing any volatility when they've been talking intraday is because they've been just kind of repeating the same rhetoric. So GDP came out yesterday. It didn't really have much of an impact on the market. It just proved that inflation is still there, and it's going to be a while till we get to our 2%. Bostic says, see, look at this rhetoric, has not yet declared victory over inflation. See that? They're not saying almost or we're on the right, has not declared victory. So you got to listen to what they're saying. Still work to do, he says. Collins reiterated the likelihood of interest rate cuts starting later this year. So see that? They're still kind of in that people are still thinking, okay, it's going to happen. There's now a 2.5% chance of it happening in March, 18% of it happening in May. See that? So there's still a lot of people holding on to this, including myself. I think this is accurate. I think that because a lot can happen in the next couple of months, especially right now. I would say this is probably 15, 12%, but okay, 18, good enough. But if you start seeing this number get to 10%, 5%, oh boy, it ain't going to be pretty. And a lot of firings, a lot of layoffs, Gritsky as well, too. How about that? That a lot of folks are not talking about. Earnings, we got Dell, which may be included in the S&P as early as tomorrow. Uh, we got Autodesk, we got Zscaler, a lot of tech. This is a lot of tech, guys. Hewlett Packard and Best Buy. I love Best Buy. This is one of my personal favorites. I like the not because of the stock. I like the company. But again, a lot of earnings. So be careful with tech. We got core personal consumption expenditures. That's going to be the big report. That's going to come out in 10 minutes. We got Chicago PMI. We got pending home sales, and we got personal spending data, which will be pretty. I want to see personal spending. Tomorrow, the big report is going to be the ISM and consumer sentiment. So you're not, which is really weird. I'm so used to seeing the Friday employment report. If anybody knows why they pushed it to today instead of tomorrow, would you guys send me an email? I'm trying to figure out why it's today instead of it's supposed to be right here, like it always is, but it's today. And then tomorrow you got consumer sentiment. So tomorrow will be a very interesting day. But today will be I think today will set the tone for the rest of the week this morning. Now, let's talk a little bit about global economy real quick, and then I want to get into. So earnings today, Chicago, personal spending, personal home sales. Europe is flat. I mean, really flat. German data did not come out really well. Germany is in big doo-doo right now. Germany is the biggest economy in Europe. Construction stocks gained ground, technology retracted, but basically the world is waiting for U.S. to show itself. Japan closed higher, giving us a little bit of a tailwind. Haven't heard much from China, but we need a little tailwind here because it'll cost our gambling stocks. There you go, curious cat. It'll cause our gambling stocks to rally, and I have a position in Las Vegas Sands, so I could use a little upside in China. Also, China helps U.S. economy. It is the second strongest economy. Yeah, Spain was good, but Spain is not that big of an economy. Japan's Nikkei closed slightly lower today. Technology and steel stocks led the decline. Interestingly, steel stocks were pretty strong yesterday in the U.S. Automobile production plummeting due to suspensions at Toyota Corporation group companies following safety tests. Keep your eye on auto stocks today. Typically, when one big manufacturer goes down, it gives tailwind to others. So if you see Ford or GM positive today, they've been pretty strong, by the way, lately. It's a good sign. We've had very negative numbers from Snowflake. We've had somewhat negative numbers from Salesforce. Salesforce is a very instrumental stock in our economy right now because a lot of S&P 500 companies use it. That's right, Kirk. That's right. Keep your eye on Okta. It's a great stock to trade. Keep your eye on HPQ. But as I mentioned, we have tech earnings on the table, either pre-open or after the close. And these stocks are in play. So you probably do not want to trade them. Dell, Autodesk, Zscaler, HP, and Best Buy. I'll be keeping an eye on them all today, and I'll be updating you in the VIP room and the pit. All right, Russell 2000. I like what I'm seeing right here. Actually, I like this ascending triangle. Here, let me. I genuinely like this ascending triangle, and I'll tell you why I like this ascending triangle. Look at where it is. I'm going to zoom out right now. This is why I always say it's very, very important to look at the macro view. So if you look far enough, this is the all-time high. We've been in this channel for a while, right? Well, look how we're getting to the uppity part and holding the uppity part of this channel. See that? That's good. That's really good. We're not going back down here. And what we do is we double check this with ARK, because ARK and Russell 2000, they're very similar. We call this the degenerate index. See how ARK is holding up here really well, better than it has most of the time previously? I want to see it break out. If the small caps and ARC stocks start breaking out, that's going to be huge, huge, huge for the market. That's going to be the real sign that interest rates are going down because small caps always lead the rally, not large caps. That's why I say this AI thing you're seeing right now is a bunch of fafooey. All right, I'm going to do the short side first, and then I'll do the long side. Okay. I don't know why, just because. Get your pen, get your paper ready. This is straight from my notebook for today. This is stocks that I'm looking at to the short side. You can obviously see why. They're breaking down. Gold miners breaking down. Solar stocks. When solar stocks break down, assuming the whole sector breaks down, they could really move. I mean, really, really move. I'm waiting for this to break the low and really start going. It does. It does, Adam. There we go. Whew, I like that. Oh, I'm taking my notebook with me to work today. Humana, it's back. It's back. Look at this. The stock lost 3%. I told you about the stock yesterday in the morning, by the way. Down 3% yesterday. TDC. Some of these are repeaters. Some of these are brand new, but this is what's on my radar this morning. This one's been on my radar for about a week now. Now, I'm not checking for sectors or earnings. So there may be several stocks in the same sector, which is a good sign, but you don't trade all of them. Look at this nice little descending triangle we got here that we broke down. I like that. A little bit more maybe. And I like how volume is picking up here. I like this stock. ENR. Battery companies, battery, natural materials. Look at that. While the market is making new highs, the stock is breaking down almost every day. What do you think institutions are doing? Buying it? Roger, how do you know if institutions are buying or selling? I'm literally showing you. This stock has been on my list for about a week now, going down. OMCL. This is the last short stock. But notice at least I have some shorts now. Adam, you like the repeat picks, huh? Oh, this is a beauty right here. Look at this. And by the way, I gave it to you guys about a week ago. One thing I don't like about these shorts, they don't seem to have a lot of liquidity right now. I'd like to see a little more volume come into the short side. Okay, now let's look to the long side. What's the sector in play? Industrial. Industrial is the sector in play to the upside. 100%. Look at the industrial stocks. Amazing, right? Yeah, hey, you know what? Oh yeah, Cam, the first stock on my list right here, SE. You literally, that's right, Carlos. It is, isn't it? You're right, it did. And also, let me show you what else it's doing. You literally picked the first stock on my list, Cam. That's pretty funny. So the gap, and it's above the 200-day moving average, and it's starting to fill this gap. So there's three reasons why I like it. It's been consolidating for a long time, building a base. It's filling in this gap, or starting to, and it's trading above the 200-day moving average. And as long as it stays above it and comes up, I'm going to like the stock. So yeah, I gave it yesterday as a bonus, actually. Toast. Funny that you mentioned the same stock that was number one on my list. Another one right here, starting to come up. Toast. Kava. Is this a coffee company? I'm just curious. I don't know what they do. Look at that, baby. Whew, nice volume, too. If anybody knows what they do, let me know. Good, good, Adam. Yeah, I remember you took that trade in the VIP room, I think. Another stock that I've been hunting for a while. It looks beautiful. I mean, this is beautiful. Volume, look at that. Remember, folks, I am not screening for earnings or sector correlation, so you're going to have to do that yourself. This one's been on I wanted to buy this stock for the last 2 days, and I haven't, and it's now making a swing high. Maybe I'll buy it this morning. Mediterranean restaurant. Thank you, Manny. I appreciate that. Hey, I was close, right? I'm just kidding. Italian restaurant. Okay, cool. Hey, you know what? I've seen them before. Now that you guys mentioned it, I've seen it before. I've seen it before. I've seen Cava before. Okay, let's CL. Oh man, I love this stock. Let me put a little highlighter by it. Another one that folks in my trading pit might have gotten yesterday at the end of the day. I wonder who must have given it to them. DHR. Yeah, now that you guys mentioned it, I kind of put two and two together. This is a beauty right there. Beautiful chart. MasterCard looks great right now. Caterpillar's looking good again. Builder is looking good again. I'm almost done, folks. What a trend. Look at this trend. But volume hasn't been amazing, but the trend has been great. Ferg. Can someone tell me how the economic data did? It's jumping? Good. Good, 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 good. Here, let's just quickly take a look at it. This is the only report I care about. It'll come up. Before I finish, this is what I care about right here, year over year. Not jumping that much. We'll see in a minute. Let's see what it does. All right, so we got Ferg and the last one, no, two more actually. Vive and one more. Interactive Broker. And I think I've seen other stocks, financial stocks doing well, so this is not a big surprise. Look at this trend. And it's still not running away from the 8-day EMA. Okay, let's look at now at the bonds. Let's see how the markets are reacting here. Nothing really on the bond market. Let's see how. Still hasn't reported. Does anybody have this number, the PC index year over year? I want to see that it went down. This is the number I care about. I want to see if it's below 2.4. Here, let's look at the NASDAQ right now. Huge uptick in TLT. That's good. That's good. Good, good, good. Let's see what the S&P is doing. Not much. 2.8. Ooh. That's bad. That's bad. See, that's telling us, okay, so I'm glad I'm still here. So PCE, the price index year over year, if it's 2.8, that means it means inflation is more stickier, than they expected. No, it's not. It's 2 point Cam, it's 2.4, man. It's not 2.8. It's 2.4. No, it's okay. It's all right. It's what they were expecting. That's okay. That means, see, now they could say, see, 2.8, they would say, we got a problem. But 2.4, they could say, hey guys, a year ago it was 2.6, now it's 2.4. We're getting closer to 2%. That's okay. It's a fair number. Look at the range, 2.3 to 2.7. That's the only thing that matters. This is the only number that matters. So the bond market should be doing okay. Not really seeing anything crazy. The SPY's coming down a little bit. It's not having a major impact as of yet. This report was fine. Nothing too bad. All right. I'm glad I'm hanging out with you guys here during this. This is the funnest part. Next time I'll use my TC2000 so we can get real-time data. Folks, at 11 a.m. is going to be my VIP room. I'll put everything together, give you my list, give you some hot stocks. We have a good time. And most importantly, folks here make money. If you guys make money following me, post it in the chat. All right. Pargo, I don't follow that stock at rogerscott.com. You guys have a blessed day. I will see you guys later. Love you all. Take care. Bye, everyone. Thank you for being here.